Welcome to Rish Tribe. Let's just jump right into it. Let me hit you with a massive reality check right out of the gate. Did you know a staggering 75% of millionaires do not rely on just one paycheck? No way. They've got multiple streams of income flowing in. So look, if you're relying on a single source of income right now, you are basically one step away from financial disaster. But today, we're going to completely change that. I'm Richard, and I'm going to walk you through exactly how wealth is actually built.
And hey guys, I'm Monique. I'll be here to keep Richard grounded, asking the real questions that the average working person actually needs answered to make this stuff work in the real world. Let's dive right in.
7. Now this isn't just some lucky number. It is literally your financial fortress. According to IRS data, the average millionaire actually possesses 7 distinct streams of income. And no, this isn't about working 7 times as hard, because nobody has time for that. It's about protecting yourself from financial failure. Think of it like this. When one stream dries up, say the economy shifts, or your industry gets completely disrupted, you've got 6 others keeping your wealth growing.
Section 1. The Millionaire Income Blueprint.
All right, so let's demystify how the wealthy actually structure their cash flow. Based on Robert Allen's multiple income theory and that IRS data we just talked about, here are the 7 streams. First up, dividend income from stocks or mutual funds. Second, rental income from real estate. Third, earned income, which is your standard paycheck or active side hustle. Fourth, royalties from intellectual property, think books or inventions. Fifth is business income from actual profits. Sixth, interest income from savings or bonds. And finally, capital gains from selling appreciated assets like stock or property.
Okay, Richard, looking at this breakdown, it's honestly a beautiful concept, but it also kind of looks like something only a millionaire can afford to set up in the first place.
Because let's be real, here's the reality for most of us. What if I only have my 9-to-5 paycheck? I definitely don't have thousands of dollars sitting around to just, buy a rental property or invest in massive dividend portfolios. A lot of people feel completely stuck relying on that single source of earned income. So how does the average person even begin?
That is absolutely the perfect question, Monique. Listen, you don't start with all 7 on day one. You start by leveraging your existing skills to build that initial cash flow. For example, you can freelance your current professional skills on platforms like Fiverr. Or, if you know a specific topic really deeply, package it into a course on Teachable. Need immediate cash? Drive for Uber. Got a craft? Sell it on Etsy. The whole goal here is to convert your active time into a second stream. That extra cash flow becomes the seed money for your passive investments later on.
Section 2. Scaling beyond active income. Here's the thing, you can't just trade your time for money forever. Strategic growth really means building a system where you layer your revenue sources over time. Take smart creators, for instance. They use free content at the top of their funnel, like a YouTube channel earning AdSense revenue, just to build trust. Then they funnel that audience into paid digital products. A really great real-world example is the creator Islo. He gives away a ton of free value, but sells premium Notion templates. And it scales infinitely because a digital product can literally be sold 1,000,000 times without you having to work an extra minute.
Right, but what if you're providing a service like consulting or graphic design? You can't exactly just sell a template. You're still totally capped by your hours, unless you hire a huge team, which brings a ton of overhead and stress.
Exactly. Which is why solopreneurs have to scale super smartly without hiring right away. Step 1 is to niche down. Become the go-to expert for a very specific client, like, say, being a designer strictly for online educators. Step 2, adopt value-based pricing. Start charging based on the revenue you generate for the client, not the hours you sat at your desk. And step 3, strategically raise your rates as demand for your specific expertise shoots up.
Section 3. Fractional real estate investing. Okay, so rental income is definitely a cornerstone of wealth. But let's be totally real here, Richard. How do I invest in real estate with only $50 in my pocket? The common assumption is that real estate requires massive upfront capital. Coming up with a 20% down payment on a house is just completely out of reach for the average person today.
10 years ago, you'd be absolutely right. But today, that assumption is dead wrong. Through fractional real estate platforms like Lofty, you can actually buy shares of a rental property for a minimum of just $50. And get this, they actually pay out rent daily with 24/7 liquidity. Then there's Fundrise, which lets you buy into diversified real estate funds for literally as little as $10. Guys, for the cost of a decent dinner, you can start building a rental income stream today. The old barrier to entry is completely gone.
Section 4. Guarding against wealth killers.
Okay, so we're building these streams, side hustles, fractional real estate, digital products, but it's not just about what you earn, right?
It's really about what drains your wealth before you even get to see it.
That is such a crucial point, Monique. Consider this absolutely staggering sum, $713,257. This is actual actuarial data from HealthView Services projecting the retirement healthcare cost for a hypothetical average retired couple, let's call them Peter and Lorraine. And this is just managing common chronic conditions like high cholesterol and type 2 diabetes. If you only have a pension or a single income stream, one medical crisis is going to completely wipe you out.
Wait, hold on. So if that's the cost for people with chronic conditions, what if you stay perfectly healthy? It should be way cheaper, right? Actually, scratch that. Shockingly, no. Because of longevity and inflation, healthy individuals face massive costs simply because they live longer and require more years of care. A healthy couple without conditions can see their lifetime healthcare costs push well over $1.38 million. This right here is the absolute necessity of multiple income streams. You literally cannot outsave these numbers. You have to out-earn them through diversified cash flow.
All right, well, speaking of things eating our wealth, let's talk about taxes. Because if I'm working my 9 to 5, and now I have freelance income, rental dividends, and course sales on top of that, doesn't the tax man just swoop in and take all that extra effort? Look, it's a totally valid fear, but it really just comes down to understanding tax administration rules. Your 9 to 5 employer automatically deducts your PAE, pay as you earn, taxes, but the law views you as one single taxable person. You must consolidate your incomes. So by March, you aggregate your 9 to 5 salary with all your side gigs into one big bucket. Sure, this might push you into a progressive tax band, but it ensures proper compliance, and it allows you to deduct legitimate business expenses against your side incomes to soften the blow.
And this actually leads to the absolute biggest mistake beginners make: commingling funds. Whatever you do, do not deposit your side hustle money into your personal salary account. If you do, tax authorities literally cannot distinguish between a non-taxable personal gift and taxable business income. It's a mess. Set up a completely separate business account to track your income generation efficiency, properly deduct your expenses, and verify your actual profit. Utilizing an annual tax planning checklist is going to be your best friend for keeping what you earn.
Now, before we reveal the final piece of this blueprint, if you're finding value in this breakdown and want to keep mastering the wealth game, you need to subscribe to Rich Tribe channel, like, comment, and share. Your engagement is what helps us bring you more of this high-level financial intelligence, so hit those buttons.
Section 5. Your Financial Freedom Blueprint. So we've clearly seen that relying on a single point of failure, like just one job, is incredibly risky, especially with these soaring healthcare costs and crazy inflation. You really just need to look at what skills or resources you currently have. Start small and scale up from there.
Hit the nail on the head, Monique. You build the active skill, scale it smartly without burning yourself out, roll that cash into fractional investments, and separate your accounts to fiercely protect your wealth. And that leaves us with one provocative question for everyone watching right now. Which of the 7 streams will you start building today to secure your financial freedom? Don't wait until you have a mountain of capital. Start with your skills, start fractional, start today. Thanks for joining us on Rich Tribe, and we will see you in the next explainer.